there was over $10 trillion of negative interest yielding debt worldwide, which is just crazy to think to begin with, that this concept of negative rates, which is economic insanity, was already so prevalent that was causing great concern for investors, and was one of the driving reasons for the better gold market environment that we had. And what we have here, and this is a 1 in 100 year event. What's happening here with COVID-19, this is a 1 in 100 year event. And these 1 in 100 year events serve a good purpose sometimes in terms of really exposing the vulnerabilities in the ways we think about store of value and economy and you know, how best to really kind of protect ourselves. And that utility aspect of the dollar dissipates, and people start really then thinking about value, store of value, and how do I protect my wealth? How do I protect value? Gold is going to have an incredibly important part to play in that equation, and will be the ultimate beneficiary of the absolute destruction of fiat currencies, which we're witnessing on a daily basis, and it's not over yet.
Welcome to this RTD interview. Today I'm excited to have first-time guest, Mr. Amir Adnani. He's the chairman and founder of Gold Mining, Inc., and today he's joining us to share his thoughts on the global economy and, it's more importantly, the importance behind precious metals and, more importantly, gold. So, Amir, welcome to RTD Interviews.
Hey, really good to connect with you for the first time. And what a time, huh?
Yeah, yes, what a time it is. So I'm definitely excited to be able to connect with you and get your thoughts on what you see in the gold sector, as well as the opportunity that you have with your company. But before we dive any further, for those that may not know Amir Adnani, can you give us a little bit of your background and how you've arrived at this point in your career?
I'm an entrepreneur by background. I've been focused on the hard asset businesses and mainly focused on gold, precious metals, and uranium. Which are very important to the way we consume energy, especially carbon-free electricity, and gold, which I've had a fondness for really since really an early age, because it was common in my family, especially my grandmother, who's passed away now, to receive gold coins around the time of every year if you finished each year's school year, and also around the time of spring. Today actually is the first day of spring, the spring equinox, and that's a way in the Persian culture the New Year is celebrated. And it's an interesting day to actually remember her and to remember the concept of giving gold coins at a time like that. And you know, in older cultures, there's a total belief in the idea of gold being money, and it's something that for generations has been passed around. And it really also in a way is distrust in the system, and the system in terms of really necessarily being responsible for all fiscal and monetary policies and how that can destroy value. So long and short of it is that I think for me, from the get-go, as soon as I came out of university, I completed a Bachelor of Science degree, and I was from the very beginning interested in entrepreneurship, building businesses, as a way of pursuing not only prosperity in terms of how it creates jobs, but it's really about being financially independent and pursuing financial freedom, frankly. And one thing that I've really admired about, you look at what we've seen in the U.S. in the last 3 years with the tax reform, the focus back on small businesses, small entrepreneurs, et cetera, is that it's an engine. But I've been really interested in that. I'm very interested in hard asset businesses. Started Uranium Energy Corp, which is a U.S. company, and secondly, Gold Mining, which is the company introduced me as the founder and chairman of.
Okay, well, sounds good. Thank you for sharing that. And so definitely looking forward to finding out more about gold mining. And so before we dive further, I'm curious to get your thoughts on where we're at right now. So it's very interesting as far as all the mainstream attention that gold and silver is getting as well. And so I'm curious to find out, at this current moment, what are some things based upon the industry you're in that really has you the most concerned, or what do you keep an eye on at this current moment?
Well, the biggest thing that I'm keeping an eye on, and I think the biggest concern out there for all of us, is really just making sure that from a health point of view, we're staying on top of what we're learning, this is a very fluid situation, and regardless of what anyone wants to kind of think and project on this, I mean, no one's really sort of seen the full cycle of this virus before. So I think first and foremost, you got to really be thinking about the human aspect and the health aspect of what's happening right now, which is so unusual because there's so many comparisons to the 2008 financial crisis right now, or other points in the market in history when we've had market crashes or extreme volatility and turbulence. But this time around, there's obviously a very important human element to it. Beyond the human element, I think, which is first and foremost, the second part of what's happening, which is clearly or is concerning me, is the massive amount of monetary policy easing, injection of billions. I've lost track of what and the repo market, the repo operations are close to $1 trillion. The amount of commitment being made by the Fed, whether it's fiscal policy, monetary policy over in Europe, et cetera. It's dizzying how fast and how quickly we've seen these measures be introduced in span of days, and then how little impact it's actually having in easing concerns in the market, which really goes to show you that the investors first and foremost are really concerned about when can we get back to basics, going out, going to your office, taking your kids to school, going to restaurants, et cetera. But beyond that, I think it's even more troublesome that we're in this position here now where the economy before this point couldn't handle higher rates, something closer to historic norms. And every time Fed came to raise rates, which was already low, there would be these kind of temper tantrums that the market would have. And so it's just concerning that, we've lived off of cheap money for over a decade. And here we are, we're going even deeper into, and I've even lost track of which round of quantitative easing we're on, QE4.
Yeah.
And so this is all concerning. And I think now more than ever, you got to question the soundness of fiat currencies and the fiat currency system that has been built. And if there was ever a playbook for someone to put out there as to why you need to own physical assets, physical gold, and whether it's the exposure to the physical or proxies, being companies that are exposed to the opportunity set to develop and mine precious metals and gold. I mean, this is not only I think Goldman Sachs said it best, the true haven of last resort in terms of referring to the gold market. So look, to recap, there's definitely some public health concerns we all have. We're all living through this together. But this is a very important time to think about the opportunity cost not to own gold. Gold is really kind of coming out of a period where it was in a long bear market, right? From 2012 onwards, we had a long bear market in gold. Year over year, gold prices has appreciated in value. In most recent weeks of liquidity crunch that we've seen, everything, including gold, has been sold off. This part is similar to 2008, even though the circumstances around today's market isn't exactly like 2008. But a liquidity crunch always plays out the same way. Everyone sells everything they can to raise cash. Then when you get a bit of stability, and when the Fed and everyone that has any capacity, all central banks, ease like there's no tomorrow, the setup right now to arguably see the strongest gold market, that setup is very much there.
Right, I do agree. And so one of the things you mentioned earlier was just the confidence or lack thereof in regards to the response of central banks. And so in 2008, it was led by the U.S., by the Federal Reserve. Now it seems that every central bank is all in the same game. They're coordinating efforts to make sure they cut at the same time, to stimulate. At the same time, the markets are tanking and investors are very concerned. And so the long-term outlook on fiat currencies, I think, is going to be tested right now. And so not only in the U.S. with the Federal Reserve trillions, but everywhere else they're printing. And so in your personal opinion, do you foresee in the next couple of years where people actually no longer trust their national currencies, no matter where they're at on the planet?
Well, if you think about just before we entered this period of the turbulence we've had in the market, sort of call it this post COVID-19 turbulence that we're in. Right before that happened, right, we had a situation where there was a record amount of central bank buying of physical gold month in and month out, especially in Russia and China, and especially a lot of the Asian central banks. So there was already this trend happening, not just by everyday folks, but starting at the central bank level. Then you go a step below that, and you look at the fact that before this whole fiasco panned out, there was over $10 trillion of negative interest yielding debt worldwide, which is just crazy to think to begin with, that this concept of negative rates, which is economic insanity, was already so prevalent that was causing great concern for investors, and was one of the driving reasons for the better gold market environment that we had. That was all before close to $1 trillion of repo operation by Fed. And again, we're talking, depending on which count you keep, I mean, every day Mnuchin is coming out and Powell is coming out to keep pumping more cash in. By the time we're said and done, we could potentially have negative interest rate environment in the US, as unthinkable as it is. I mean, not to mention, just even 2 weeks ago, the entire German yield curve had gone negative. And look at the whole negative rate environment in Japan. And so you look at it, and what we have here, and this is a 1 in 100 year event. What's happening here with COVID-19, this is a 1 in 100 year event. And these 1 in 100 year events serve a good purpose sometimes in terms of really exposing the vulnerabilities in the ways we think about store of value and economy and how best to really kind of protect ourselves. And so I think now more than ever, look, maybe not this week or next week, right? Because again, there's a lot of moving parts right now. And I think there's a lot of focus right now on just getting your hands on dollars, because there's a shortage of that. But when the actual day-to-day needs and that utility aspect of the dollar dissipates, and people start really then thinking about value, store of value, and how do I protect my wealth? How do I protect value? Gold is going to have an incredibly important place and part to play in that equation, and will be the ultimate beneficiary of the absolute destruction of fiat currencies, which we're witnessing on a daily basis. And it's not over yet. It's not over yet.
Right. I know it was really brought to my attention, I think it was last year, with the Basel III and gold being reintroduced as one of two, along with the Federal Reserve note, as being capital that the banks can actually hold as assets on their balance sheet. And so after watching all the gold being repatriated throughout the last 2 or 3 years, I've really come to realize the importance of gold, because central banks and governments are all stockpiling up. So their vaults are relatively heavy. And I think it's for a reason down the line. And so as we mentioned before going online about how there's a scramble right now to get physical, but yet a lot of your local coin shops and whatnot, they're all sold out. Do you think this is the flight to safety by the public now, that because there's so much turbulence, so much uncertainty, that's the reason why people are flocking to your coin stores or whatnot to try to get something physical in their hands?
Absolutely. And there's no doubt about it that there currently is a disconnect between the physical market, the bullion dealers, and the shortage of bullion and availability of that for delivery, for physical delivery, versus the paper market, the COMEX market, et cetera, which doesn't reflect that yet. Not to mention that you've had numerous mine operation suspensions in Peru, in Russia, elsewhere, gold mining operations that actually could further cause supply disruptions along the way. And again, these shutdowns being due to the various companies need to take COVID-19 response measures. But even at a very personal level, I'll share with you, my eldest, who's 12 years old, for years has heard me talk about and show him these gold coins that I mentioned earlier I would receive from my grandmother. And talk to them to my children about the value of gold and the value of converting dollars or whatever the local currency is into gold. And for his birthday last month, he actually asked for a gold coin. So we got him a gold coin for his birthday. He turned 12. Mm-hmm. He asks me every day about how he's doing with gold and the value of that gold coin. And more importantly, we checked back with the shop that I got the gold coin from, and they're all out. They can't get any more, which made him even more excited about the fact that he had got something that was like money. He could put that gold coin in his wallet, and that it was now something that was valuable and was desired. And I think this is important because this concept of, everyone's talking about, millennials and, this is all a generational thing. No, destroying value or governments making poor policy decisions. And I'm not talking about this administration. We're talking over many administrations, many years of loose fiscal policy and monetary policy that has completely debased fiat currencies. That didn't happen overnight. That's been going on for generations. And why should it be a generational thing today for people not to appreciate that that's what happens with fiat currencies? They can be debased. Gold can't be debased. It is the oldest form of currency and value. And it's fascinating to also see the effect in your own household mm-hmm. with your own child when you have an experience like that. So there's a shortage of what's your experience? I mean, I'm hearing there's a shortage from everyone I talk to. Yeah, what are you hearing?
So I do live streams. I do all types of things with this channel here. So people always give me their intake from where they're living at, and they're saying, Mike, it's hard to find, and then every bullion dealer that I go to, on the top of the website, it says, due to the current situation, we are we're short. Place an order. It might be here next month, so there's no time frame to it. And yet the price hasn't moved. And so it's one of those things where the demand is there, the price is not moving. And then a lot of people reference the gold to silver ratio, and how I think as of today, it's like 120 to 1. And so we're witnessing all types of historical events, but yet in the United States of America, the gold price is still not really reflecting the demand. But yet every other country, especially Australia and even Europe now, they're all at all-time highs, except in the Federal Reserve note. And I think that's very interesting.
Yeah, no, I agree with you.
So I want to dive a little further. So one thing I enjoy doing with our Rethinking the Dollar is bringing opportunities or potential opportunities to the viewers. And so you're the founder and chairman of Gold Mining Inc. And so for those that are not too familiar with the line of work you're in, give us a little bit of the foundation as to how this came about and what are some activities you guys are involved in currently.
Yeah. So again, as I mentioned at the very beginning, as an entrepreneur, I've been focused on forming businesses, building businesses in the commodity and natural resource space. In the field of uranium and uranium mining, I formed a company that within a span of 5 years became one of the newest uranium producers in America. And to this day, we're building a company that is the largest by market cap in the US when it comes to uranium exploration. My vision for gold was inspired by a strategy that I had seen get implemented in silver and copper in the 90s and early 2000s. A couple of entrepreneurs that were backed by Rick Rule of Sprott Asset Management, who basically came out and bought projects that had been drilled for silver or copper, but were not in production yet. And at low silver copper prices, they were sub-economic. In 2010, I thought, why don't we try to do the same thing in the gold business? Well, we were able to get the backing of the same very important investor, Rick Rule, from Sprott, who had backed these other businesses in previous cycles that had gone to become multi-billion-dollar companies. That's Pan American Silver, that's Silver Standard, and Lumen Copper. Well, we were able to then attract additional foundational investors, Marion Katusa, Doug Casey. These are individuals that are very much at the forefront of mining finance. And we said, look, the gold price, as it heads into a difficult environment, it will be cheaper to buy gold projects than the replacement value of the work that has been done. So imagine if you go and do $20-30 million worth of drilling on a property to delineate or discover a gold resource. During bear markets, the same property could be for sale for a couple of $1 million. So it's almost like 10 cents on the dollar kind of opportunities. It sounds good, right? It sounds like I'm saying buy low, sell high. Mm-hmm. Well, in reality, we were able to actually execute this. So Gold Mining Inc. was formed in 2010. We IPO'd the company in 2011 in Canada. And we made our very first acquisition in 2012. We acquired a gold property in northeastern Brazil that had close to $30 million of drilling. And we acquired it for about $8 million. So it wasn't exactly 10 cents on the dollar, but it was buying an asset for less than the work that had been done. The property wasn't in production, and that's what we didn't want. But it also wasn't grassroots exploration. So it wasn't high risk, high reward. We knew what kind of resource was there, and it was independently verified. Fast forward, and over the next 8 years from that first acquisition, we've made enough acquisitions that now gives us a portfolio where we're in 5 different countries. We're in the US, Canada, Colombia, Peru, and Brazil. We have 16 gold projects, 8 of which have an independently verified gold resource in terms of how much gold has been defined in the ground. 10.5 million ounces of measured and indicated resources and 12.4 million ounces of inferred resources. If those numbers don't mean anything to your audience, said differently, it makes us the largest resource holder of gold in the world for any pre-production company. And today, more than ever, I think it's actually a good thing to be a pre-production company, because with production comes operations, comes hundreds of employees, which means more complications in today's kind of post-COVID-19 world, where mines have to be shut down if you have 100 people and you got to look after the health and safety of those employees first and foremost. And so what our belief has been is that during cyclical low market points, is the best time to accumulate and consolidate and build a big resource portfolio. And our strategy ultimately is that as the cycle turns and we end up in a cyclical bull market for gold, this would give us an opportunity to either develop these assets, sell them, joint venture them. We would be in the driver's seat. And we're particularly in the driver's seat, Mike, because since 2012, since the year we made our first acquisition, there is a 42% decline in industry-wide resources and reserves. This is according to Bank of America and a report they put out earlier this year. And that is due to the fact that during the low point in the gold market, major gold producers cut spending on exploration development. They cut spending on acquisition. They hunker down. And we had a prolonged bear market. This bear market is really long in the tooth. We have a market pullback right now. I'm talking about the broader market. But the broader market has pulled back from all-time highs. Gold stocks haven't taken off yet. And in fact, they've been sold down in this recent sell-off with everything else because there's this rush to cash. But we weren't at all-time highs in the gold market. The gold market and gold stocks were already in an 8-year low bear market, an 8-year long bear market. Mm-hmm. And so I think if you, now more than ever, I think I look at our company and I think that there's been a serious shortage of capital and underinvestment in gold exploration and development in the last 8 years. We were basically acquiring assets. You know, our philosophy was, let's go buy our Christmas decorations in January as opposed to December. And when you do that, you get better pricing. We were able to acquire close to $80 million worth of assets. And Mike, when you look at what the value, what the market cap of the companies we bought for 80 million was, the last time gold was at $1,800 an ounce, so back in 2011, it was over 800 million. So again, a classic case of kind of putting a business together through acquisitions. This was an acquisition-driven strategy, spending $80 million to buy $800 million worth of assets. What's the difference? When we made our acquisitions and spent $80 million making these acquisitions, the gold price was less than $1,300 an ounce. And today it's at $1,450. Probably, 2 weeks ago it was $1,700. Obviously, gold's also been moving around the last couple of weeks. But we took the view that these assets will be worth more when the cycle turns. So today, our company is most importantly debt-free. All of our acquisitions were made for by either cash or equity that we issued. So you have a debt-free company with great diversification. So you don't have all your eggs in one basket, which in today's world is really critical. We're in 5 different countries, 15 different projects, and we're not in operations, meaning we don't have the operating risks and complexities that comes with the world today, where number one concern is the health and safety of employees. So if you have hundreds of employees to look after their health and safety versus a very small team, we have a team of less than 15 people, and we maintain pre-production assets, which means we haven't taken on debt to go build them. This strategy, I believe, is really a unique way to think about and to be active in today's gold market, where you got to be nimble, you want to have lots of size, you want to be diversified, and we really check all those boxes. But the key thing is, we started doing this 8 years ago. And so it sounds, but unless you were buying in the last 8 years where everything was out of favor, it would be difficult to reassemble this today. No. Companies got, as of our latest sort of filings, we've got just under $9 million of cash. For us, that funding gives us runway for at least a couple of years. And so that's attractive as well, where we can maintain our portfolio for an ample amount of time. And the company's, a listed company. So there's listed on the Toronto Stock Exchange and in the US. So there's lots of information. You can find that on what we're doing at goldmining.com.
Sounds good. Well, Amir, one of the benefits I have in speaking with gentlemen such as yourself is I get to learn. And so, as you mentioned, you started off mentioning how it's always good to be able to have the physical, but also have exposure to some companies that clearly seem to be undervalued in nature. And so, give me a little bit of more information as far as I'm assuming by you being a CEO and founder, you have some skin in the game here. So what are you anticipating? So give me a 3, 4, 5 year game plan looking ahead. What do you anticipate when the true value of gold reaches what it should? What do you anticipate for Gold Mining Inc.?
Yeah, first of all, I've got a lot of skin in the game. And so, yeah, for full disclosure, obviously, having skin in the game is a good thing, but that also means you know that you're hearing it from the horse's mouth. I'm the largest individual shareholder in Gold Mining, but I'm also proud of the fact that we've attracted other investors, whether they're institutional investors focused on mining and gold, names like Sprott, names like Extract, names like Ruffer, names like Marin Katusa and Doug Casey, or intermediate gold mining companies like IM Gold. That's a multi-billion-dollar gold producer. They own shares in our company. So it's not just about me. I think we've attracted a shareholder base and investors to our shareholder base that shows and validates our strategy and our asset base and what we're doing, number one. Number two, look, I think we are at the very early innings of a new beginning, a new bull market for gold. Having said that, our share price still is trading at 1/3 of what it even traded at in 2016. Remember, in 2016, there was a gold rally. And what's interesting about today's market is we have a higher gold price than we did in 2016. But equities in general, and our equity as well, is trading at 1/3 of its 2016 level. And so I really think that we're going to play catch up here. I think at the very least, equities should be back at their 2016 levels, especially when we have a higher gold price. And arguably, with all this monetary easing, with all the currency debasement that's going on of fiat currencies, gold price should be heading, whether you listen to Goldman or Bank of America or Citi or Bloomberg Intelligence this morning, they're calling for $1,800 to $2,000 gold. And so there's, I think, an environment where we can at least regain our 2016 levels. And that means at least, going up, from, we're trading at about $1 Canadian right now. We were at about $3.50 Canadian back in 2016. And you have analysts that cover our company that are calling for even higher levels in terms of what their expectation is. But from a business point of view, we're focused on acquisitions. We think there still is an environment where we can make acquisitions. We just made an acquisition that we announced 2 weeks ago in the state of Idaho. We've made acquisitions in the country of Colombia. So we still see a disconnect between the junior market and all the large cap gold producers. Just like you and I were talking about the disconnect between bullion. There aren't gold coins available. Bullion dealers are out. Meanwhile, the paper market keeps trading. There are those disconnects in the equity market as well. So we still see the opportunity to be able to make good deals, good acquisitions. And as the market turns and all these major gold producers that have been underinvesting, I think it puts us in the driver's seat to joint venture our properties with them, sell our properties to them, maybe our entire company, or have the option to develop them ourselves. As the gold price goes up, our cost of capital is going to come down. So Mike, to me, we're still building this business. We're very aggressive about how we want to build the business. And as we've shown recently, we're going to keep adding to our portfolio. And in the coming weeks, we'll announce the resources that we're gaining by making these acquisitions. So our overall resource base is going to continue to grow at very attractive valuations.
So, Amir, you referenced that you guys have some projects down in the South America region, and you said Colombia. So I'm curious, so what area is that project you have in Colombia, and what's some of the developments down there?
We have a portfolio in Colombia that we started putting together with a focus in an area known as the Mid-Coca Belt. It's a very prolific gold belt, Mike, that basically spans roughly 50 to 70 kilometers north of the city of Medellin, and then also the same amount of distance to the south. And this area is relative to other parts of the Andean belt in South America that goes all the way through to Peru and Chile. This is the least explored area, and it's partly due to security concerns or reasons, during the days of the Medellin cartel, etc. But it's been much safer and easier to work in over the last decade. Well, over the last decade, they've discovered close to 100 million ounces of gold in the Mid-Coca Belt. And you see interest from major gold producers, the likes of Newmont Gold, Agnico Eagle, B2 Gold, Anglo Gold, have been acquiring or have ground in this area. And most recently, a Canadian company that is being acquired or has been acquired now by China's Zijin Mining for $1.4 billion in cash, was situated about 50 kilometers just to the north of where we've been making acquisitions. So we made our first acquisition in Colombia in this area, right in the heart of this belt that I'm talking about. In 2016, we made a second acquisition in 2017, and we just made our third acquisition 3 months ago. 3 separate projects that used to be 3 separate companies are now under one roof, under our ownership. We've got an excellent team in Medellin, country manager, geologist, the staff that basically can look after not just our Colombian projects, and also what we've acquired in Peru. We can kind of satellite and have the same team look after all of these projects. So very exciting part of the gold sector right now is this particular region. But don't forget, this is one of only the 5 different countries or regions that we've built a portfolio in.
All right. And the reason I was curious is because I was not long ago down in Medellin area and being down there doing some things with real estate, but yet I was asking around for mining or anything of that nature. No one seemed to know. So I didn't know I was right in the hub of what seemed to be a hot spot. So definitely, I'm assuming there's going to be a lot of opportunity down in Medellin because I definitely enjoyed myself down there. So it's good to hear you guys have some projects down there.
Well, and it's interesting you have that perspective with boots on the ground, and you were just there, and you know from your experience that's a very workable city in terms of functionality. It's modern. There's technology companies that are based out of Medellin, and so Colombia is a very progressive place to be based in and to be operating in South America. And again, these are exciting opportunities when it comes to mining. Every time you have a situation where a region was overlooked or underexplored, those are where the big opportunities are.
Right, I do agree. Right. Well, Amir Adnani, it's been great having you on RTD. Definitely, I appreciate you for sharing your insights on gold and the opportunity that lies ahead and being ahead of the curve before the price really takes off and being able to participate in what you guys have going on. So once again, I'm going to put the information beneath this video, but if people have questions, I guess the best way is just to get information from your site, or do you offer a way for people to follow you directly and stay in tune with any articles, anything you publish yourself?
Yeah, first of all, you can follow me personally on Twitter at Amir Adnani, and you can follow. That's me. That you can see what I'm talking about. you can go to our website at www.goldmining.com. And there's contact information there about how to get in touch with our team, and always available.
Sounds good. Once again, Amir, it's been great having you on RTD. Looking forward to continue to follow your work, and definitely hope we have you back on in the days ahead and get your thoughts on where we're at then and find out the progress for the company. So once again, thanks for joining us on RTD.
Thank you. Take care.